Good evening and good evening, Little Cash. How's it going, brother? How you been? How was your day? Hope you had a good day today. What up, everybody? Let's do that so I can do this and this. Throw me over here. Sup, DB85. I took the day off. What up, Chris? Welcome to the channel, brother. Hope you enjoy it. You're actually going to see me do some live trades and see me take a couple wins and losses. I'm going to record some, so I hope I can help you out. Have you traded before? What up, Sunny? Good evening, guys. Got a recording here from today I want to review. I've spent some time over the last couple days chopping up some stuff. Just me at the moment on the show tonight. I'll throw, if some people that I know come on are around, I've sent a couple invites out, so if anybody has time and comes on the stream and wants to hop on the show, they are more than welcome to come on with me. If you trade on here and you want to ask questions or anything else, you're welcome to hop on the show tonight. If you're in the comment section and you have questions for me, thoughts about the week, anything else, you are more than welcome to come on, hang out with us, ask questions, and I will do the best that I can to answer them. Nice. What type of option stuff do you do? Are you into so I use options as a vehicle, and you'll see what I do. I'm actually going to trade it live. I'm not sure if you've watched any of my other videos or not, but if you have or haven't, you'll see what we do tonight. So guys, I think to me right now it's just me, unless something changes. I'll give people a few minutes to come in, looking at some Qs and levels. What do y'all think about this fib line? I'm actually going to review this trade later in the show. I made money on it, but I'm going to review this idea and talk about this here. But you know, Q's kind of rallied off of. Q's rallied a little bit when they hit this little bit of support here. Kind of popped up some towards the end of the day. I wasn't here, so it'd be interesting to see if the Q's complete the measured move down to that fib, the 299.86 level. If we can kind of make that full measured move, or if we're done and we'll continue a rally next week. I'm not sure, but interesting into the day. I didn't trade the end of the day personally. I did not trade the end of the day. Very climatic volume. Let's see what the SPYs did, how they followed the you know, I don't trade the SPY. I should really trade the SPY more than I do. I do not trade it very often. SPY actually hit the 161.8 pivot almost to a T and then went down. And I think somebody asked me about that over in the VTF. I'd have to go back and look at the chat to see who it was, but somebody asked me about that, and I said I thought the move was done because it hit this this line. And then we started kind of trending back up. I think next week is going to be fun. I mean, we have earnings, so you know, there's no telling which way things are going to go, but I think we're going to get some good moves into next week. Hopefully we get a little bit more of a pop and then just a hard rip down on a lot of these names. All right, guys. Well, Friday Fireside, just a chill show. I'm going to do a couple trade reviews. At the moment, it's me, unless a few people write me back and want to come on and chat. If you guys have questions, leave them in the comments. I'll do a little bit of a week review. Thoughts I've had, you know, some of that kind of stuff. Go over some trades, go over some thoughts and concepts for trading and what I look for in the middle of the day, and some of that other stuff. So, you know, if you like this kind of content, and you know, you just want to help the channel out, you're here watching, it doesn't hurt to leave a like. I really appreciate it if you do leave a like. Click that button, smash it, share, subscribe to the channel, and all that other fun stuff. Really appreciate it. Helps the channel grow, does good stuff for the algorithms, and gets other people in the turned on to kind of what we do here and how we do it. I also have a Discord, which the link is in the description. Me and some other people all trade in it together. Really amazing group of traders. They've helped me so much, and we iron sharpens iron, and we continue to help each other grow, find good trades throughout the day, find good ideas to give us an edge in the market. So the link to that video, or the link to that Discord, is in the description if you want to join that room and hang out with us. I'll be doing a lot of content in the near future. I hope to double or triple the amount of stuff I'm doing right now, just because I'm getting moved in. Finally settling into my house, I'm going to take some time to actually start creating content and hopefully pushing a lot more stuff out. So, do everything you can to help this channel. I appreciate it. I'm Gator. Let's get this trade review going. Let's kick this Friday fireside off, boys and gals. So, cheers to you, banditos. I raise a glass. Amazing traders. Hope you all had a fantastic week. You traded psychologically clean. You ended the week psychologically clean. I hope you did. Either way, team, good to be a part of this community. All right. So let's say we jump into it for the guys who want to watch an actual trade that we did earlier. Is this the right one? No, this is a Q's one from later in the day. Let's jump back. I think it was around like 17 something. All right, Tesla. So I'm going to show a couple wins and a couple losses. I don't care about showing that previous win. So you can see where I was at on the day here earlier. If you look at where I was at, I had a nice... So early in the morning, I guess this is kind of a channel-ish plug. Early in the morning, no, I can't show it because I didn't actually record. I was recording Meta. But you can see my Tesla fill here. I'll jump my face out of the way so you can see the Tesla fill. And forgive me for some of these charts kind of being out of whack. A new computer monitor makes things kind of hard to record, and I have to figure some of the OBS settings out. But you can see the initial fill. This was this move I bought off the 21 here, and I called this at the open if you're in. So in our Discord, guys, we have a new thing that we're doing in the morning. Andrew sets it up every day. We give trade ideas and all that fun stuff. It is basically just a morning show, and he archives them. But over in our Discord, we have a morning show where I come on and other people come on, and we give trade ideas. I said I was looking for Tesla to pull down to the 20/28 level, or I'm sorry, 20/18 level down here, test yesterday's high, and then rally higher. I said if it did that, it would be absolutely beautiful. The only thing I regret about this trade is I didn't take 20 or 30 contracts because I was so confident in this one. Either way, took 10 contracts. That's a 6-point trade, I think, right? Yeah. So we're up $6,000 at this point. We make another grand scalping the next 1 minute breakout after that. So we're up $7,000 at this point in the day. So this is where we're going to come into the day. The reason I'm going to come into the day here, being up the $7,000, and again, this trade is a trade that we do very often, very regularly. Something like this where you gap up, you pull into the 21, which is also yesterday's high, which is a lot of other stuff. To me, this was just a no-brainer 100% of the time. Again, my only regret was I didn't take 30 contracts of this. Great setup, and I don't really regret that either, because to be honest with you, it was a smart trade, and I don't usually want to go super heavy early. So very happy with this. So either way, that's where I'm at in the day, just so you know where I'm at psychologically in the day. Okay, so we're up at this point now $7,000 in the day. We're looking at, okay, what do I want to do? What Tesla's going? Where is it going? How am I going to trade this? We hit R1. You can see right here. We can see right here. We hit R1, we're coming down. I haven't taken a trade. I'm waiting for it to come down. The reason I'm showing this is not to brag about P&L, is not to show anything else, is not to be whatever. It's simply to show how I think through trades. At this point, what am I looking at? What do I want to think through? So we have a double top. We just bounced off the 21. We're probably going higher. Okay, what is my thought process in finding this trade and taking my next trade? The next 3 trades you see are going to be losses. There might be 1 win in there. I'm not sure. You're going to see several losses, and you're going to see the way I trade these. The way I trade them Also kind of changes if I have a good cushion and I'm 7 or 8 grand up, I may be slightly more aggressive on some of these plays. So understand that, and I'm going to talk through that, and I'm also going to talk through how I call some of these things out in Discord, and if I take them or not, and some of that. So we're going to talk through that a little bit. So let's watch this. Let's get my face out of the way. I need to shave, and let's watch some of these setups. So let's watch this play. All right. So Tesla's pulling in. It hit R1. It's pulling in. We are now at the bottom of a 2-minute candle. So I bought. So let's jump back just a hair. Let's watch it again. For those of you who watch me regularly and trade with me, why do I buy right here? Yeah, Active Trader Pro. So I use, this is Active Trader Pro. If you watch my Active Trader Pro video, you'll see how I set it up. Ignore how it looks on the screen. It only looks that way on the screen because I'm using OBS to record things in blocks, so you don't see my whole thing. So pay attention here. So why do I buy this at this point? We're in the middle of a run. This is a semi-low conviction trade. Why do I take it here? What's the reason? You guys know. Several of you have asked me to talk about buying at the bottom of a candle. Where are we at right now on the 1 minute? This is the 1 minute chart. This is a 2-minute chart. Sorry for the recording issue here. Again, that's something I'm going to fix in the future. But look at this. Where are we at? We're at the bottom of here. If you were to see this, we're actually at the, don't worry about that. But look, we're at the bottom of these candles. You can't see because I didn't realize I was cutting that off there. But you're pulling down there too. Look where I buy. Okay, we're at the bottom of 1 minute candle. We start ticking up just a little bit. Some green coming in. Look, boom, buy. Not a great fill. Fills aren't great this early in the day. That's fine. Actually, it wasn't bad. Boom, instant pop up, ready to sell. Load the sell button, jump over, ready to sell. At this point, sell. I'm not trying to hit a home run. That's 30 cents. 30 cents on 10 contracts is $300. We added $300 to it. The reason I sold there is I think we need to pull down in the name. Could I have gotten more out of the trade? Yes, it went up to 36, 36.40. There's a chance that if I held it, I actually could have made more. I'm not positive, but I think the name rips. Oh, no, it doesn't. I can't remember, but I don't think it does. Either way, the idea going into the trade was not a swing. And I want to reinforce this, so let's throw my face back up so you can't ignore it. I just had a roughly 7,000, a roughly six point trade and then a 1 point trade, right? I held those trades, obviously. Now, in this trade, the idea for this trade is not a breakout. Because I think I was saying we need to pull in. We hit R1. I think the Qs might have been pulling in. I don't remember. There were reasons going on that I did not want to hold this. So the idea for the trade was not, let's get another 6 points, 3 points, 4 points. What was the idea for the trade? It was a quick scalp off the bottom of a candle because I thought I could get 30 to 50 cents off something. So I buy it. That little bit of green comes in. We get good price improvement. We get in. Boom. 30 cents and out. That's the idea for the trade. So you have a trade that gets you that 6 points, a 1 point, and then a little bit less because that's the idea. Neither one is right or wrong. It's where are you at in the move, what needs to happen, what do you think is going to happen, what other market conditions are going on. So there are other factors in when you take a trade and all this other stuff. So let's continue watching the video. I just want to point that out because sometimes people are like, oh, how do you're holding something this long. Oh, I held this one too long and it went against me. I did this. Like there's times when you hold and there's times when you don't. And you're going to see, I think that was a win. I didn't watch this, but I know you're going to see some losses in here because I know I took a couple of them. So that's why I want to show this. I want to show what it's like scalping some of these moves, and I want to show you some of the losses as much as I want to show you the winners. What up, Anya? How's it going, girl? Okay, so I bought back in because it's ticking higher. So it failed to break down, and we're breaking through R1. And we had a red 2-minute bar set up, and I can't really see that, but we had a red 2-minute bar. I'm now up $1.50, 2 points on this, 2 points on this, a little bit less, and I sell. All right. So what did we see here? So I'm going to go back to it, and I don't mean to, I'm glad you had a good week, girl. That's awesome. I'm glad you had a good week. All right, so let's jump back. Let's look at the entry. So I sold that last pop because my idea for the trade was not necessarily like it's going to go up. But you see the entry and you see how it worked. If the trade plan was it's going to go back up long, it would have worked. And I didn't realize that this one went up. But now look, I'm going to get back in it. Why? Because something changes. It fails to break down into the 8. I wanted it to hit the 8. I wanted a red 2-minute bar. You can't see the 2-minute chart here, but go to the time frames and look back at what you got. So now we start ticking up. I see all this green coming in. I see it failing to break down, and it's super strong at this point in the day. The Qs might have been going up too. I'm not sure. All right, let's just get back in it. I know I got out, but that's fine. It doesn't matter. This is now a new trade with a new idea where it looks like we're going to continue higher. All right, boom. So, all right, let's go. We're going higher. Might be. There we go. You see that green coming in. The green is speeding up. We're going through. I'll probably sell just a tad late. You had a green 2-minute bar. As you can see when I tick up, look at this 2-minute bar here. Look at this. It'll show up. But you can see that. And then I sell, and there's another $1,500. So we're up. I don't know what that is. What did I say? 7 at first. And I didn't like the PI on the 820, so I think I moved to the 830s. I think I take some losses in the 830s to start off. So, okay, here's the next losses. So here are our losses that are going to start coming in. Hopefully I don't FOMO this. I don't. It pops higher. I'm not worried about chasing it. I have to go back and look. I'm trying to remember exactly off the top of my hand, and I can't see my 2-minute chart. But okay, so we're now up a decent amount on the day. That's fine. We're just trading 10 contracts. So we're good. But we're watching this, and I'm like, okay, now we pull in. Now, this is where people sometimes can start losing. This is where I sometimes start losing in these quick hyper scalps. So we're going to watch. We put a couple of them together so we can talk through the thought process of where to enter. Now, we're already up a decent amount on the day, so we have a little bit of cushion to play with, but we want to respect the money we've had, and we don't just want to give it all back. So we can't be reckless with our money because you're not guaranteed to win. Tesla could fail. You could just lose 3 to 4, 4 points, 5 points, and then the next hour you've given this back. I can't tell you how many times I've done that. So we're looking at this. All right, where's our possible entry? Why did I just get in there? Because we hit R1 and we bounced. That is the thought process. So on the last thing, we're right here. We're pulling into R1. What am I looking for? I'm looking here at the level 2. We hit R1. We're breaking below R1. We start breaking back above. Green coming in. I'm about to get in. I'm in. Maybe a tad late. 381. Decent PI. I could sell right now for a win. I think I'm trying to hold because I think Tesla's going to break to $40 and then fail. I'm wrong here. I think this is going to be a loss. I could have initially sold. I think I held this one too long. I don't think it's a bad trade, but I'm watching. If you're watching the level 2, it still looks fairly strong. You're getting some selling. You're getting some stuff. It's not bad. I got decent entry price. I'm just giving it a little bit of time to work. There's nothing wrong with giving a trade time to work. We're at green, and now this is failed. It's gonna start failing here. Failed, out. 40-cent loss. So we lost $400. In the grand scheme of the day, that's fine. But look, we took a loss. That's fine. You're going to take these. The trade was a good idea. We're in the middle of a bull move. We broke above R1. We came down and tested R1. Granted, it's really quick in the day. We're below a whole number, 340. We think we might test 340. We hit R1, and then we start popping. We buy. At some point, I could have sold for 30 or 40 cents. I didn't. That's fine. Instead, I take a 40-cent loss. If you're going to hold, that's the risk. There's no risk if you sell when you're green. All right. So now, am I going to buy again right here? No, or at least I hope I don't. I'm pretty sure I don't. Why? We failed to break out. I'm like, okay, let's test a moving average now. Again, there's probably other stuff going on in the market right now, but we need to test the moving average. All right, we test the moving average. Now would be the right time to buy, right now. I don't do it because I think I'm distracted. I say right now because it hit and it stopped. So there's another time, and I'm going to cut this video I'm doing here, I'm going to cut a later time in the day when Tesla broke through the 21, and maybe I'll do it after this so you guys can see it. But Tesla breaks through the 8 there and then stops. It stops printing red and it starts, let's watch it again. Let's watch this. Let's watch how it breaks the 8 to let me know that this could have been a quick scalp long. And then longer if you hold it. So let's watch it. It broke the 8 and then it just stopped. It was like blocks and then it just stopped. And then green coming in. You can go long there. So I miss it. I'm looking at something else. That would have been money. And then you probably should have sold about here. Or you could hold it. It's up to you. But that would, generally speaking, on a trade like that, be my sell. It would be a quick sell because I expect it to pull down again and then go up. And I just want to take a quick 30, 40 cents there. Either way, so now what I'm looking at in this next trade, so I missed that trade, I realized it, notice I don't FOMO. So now what am I looking at? Okay, we tested the 8, we held the 8. All right, so I know I want to get in. This is a bad trade because I bought in the middle of a pop when it paused. This was a semi-FOMO trade. Hey, it could pop here. I'm up 8 grand. I'm going to take a little bit of a risk, and I lose about 800 bucks there. Bad trade. So we give back 400 bucks, we give back 800 bucks, we give back 1,200 bucks. This can happen. You can very easily start doing this. And if you just jump back in and then jump out and then jump back in and jump back out, and every time it pops, let's wait for it to pop. I don't know. You're like, all right, I'm going to get in right here. And you just saw a little bit of green, and then it should probably pull down again here. I think we have another bar before it goes red. And then you get scared like, oh, it didn't run. And then you get out, you could be in trouble. So I'm not sitting there and hyper scalping every 5 seconds trying to jump in and trying to jump out. I'm waiting, I paused it, I'm waiting for a setup. What am I seeing now on the overall chart? Well, down here, we have a red bar, I can't see what the top of it looks like. Go to your time frame on the 2 minute, but we have some red bars, a little bit of digestive volume into the 8. We're holding the 8. We have a 2 minute low here that we can use as an entry point for you guys who are like, oh, you know, I need to buy at a candle low. Well, there's the low of a candle, so we have a possible entry point off of the 8, off of here, depending on what the level 2 looks like. All right, so let's watch it. All right, so I like this. We're holding up. We're kind of, you know, we could be flagging here. I think we could break above. I'm in. We held, we're going green. The candle itself is going green. We also have, if you're wondering, we have strategies here. You have a Mark 1. What do we have? Look, this is a Mark 1. We have a Mark 1 that would trigger. We have a green takes red that would trigger. If I go to some other time frames, we might have others. Oh, know your limit 8, sorry. We have a know your limit 8 that's set to trigger. So C strategies are set up here. What else do we have? We have digestive volume that is decreasing. So this is 1 minute time frame. So we have 1 minute time frame, digestive volume. The volume is stair stepping down as the chart is going down. It looks like the chart. This is beautiful for a long. I'm like 90% sure Tesla's going higher. I don't know when. I want to time my entry. I got my entry. It pulled down a little bit. That's fine. It didn't break below the bottom of this previous candle. Popped up a little bit. Not sure what's going to happen here. I feel like I take a loss here. Maybe I don't. I sold. So it didn't do exactly what I want. I took a quick loss. I'm ready to get back in. Ready to get back in. Because I know what Tesla can do. We'll watch it. Let's watch. 20 cent loss. Now we're down 1,400 from where we were at earlier, give or take a couple $100. Just watching the bottom of this candle. All right, I want the bottom of this candle. I'm watching this. All right, we hit the bottom of this candle. Green's coming in. I should have loaded this quicker. I'm a little bit slow right now. Let's watch this. Here we go. We're tail going up. I should be looking at an entry. I think I'm a little late there from when now watching it. I should have entered. Amazing PI there. If you guys didn't see why I trade with Fidelity, go back and look at this. Look at this entry, not my skill, but look at the fill on this trade. I clicked enter. 385 is the bid. 31.25. Look at the fill on this. 380 to 375. I'm green as soon as I get in. You see the level 2. It held the bottom of that candle, broke right below that candle and popped up. I'm in. I'm instantly green. All right, I've got some room to hold this. Let's see what happens. All right, here we go. Let's let this pop. We have a red 2 minute bar, if you can see down here. So we have a green takes red. We have a know your limit 8. The know your limit 8 is about to trigger. It is into R1, slight sus. We're ready to sell. We're already up 500 bucks on this to $1,000. You could sell here if you wanted to. I'm not selling. My stop is below this. I don't care that it just popped down there. I'm willing to lose $1,000 on this trade. Let's give it some room to pop. Let's give it some room to work. Hope I give it room to work. It's okay. Give the trade room to work. If this one doesn't work, I'm probably going to let it go and let it pull down to a different moving average. I still think it's good. We haven't broken lower. We're just kind of chopping around. That's all right. No worries. You got a good fill. You got a good entry. You're up good money on the day. Let's let this trade work. We have a green takes red. We're going to make a move. We should be making a move. Let the trade go. You know you're at R1. You're fine. You're fine. You're pulling down a little bit. You're still holding. You have a 1 minute red candle here, a couple 2 minute digestive bars. The volume looks really good here. We're starting to pick up. All right, we're fine. You're not scared. Let the trade work. Let the trade work. Notice why I'm holding this one. Why am I holding this trade? Because the trade idea is we're holding the 8. There's a different idea here than before. We're on a moving average. We're holding the moving average. We're launching off of the moving average. We haven't broken below a 1 minute low yet or a 2 minute low. We're up now, you know, depending on price improvement, between $500 and $1,000. Let's go. Come on. Let it go. Let it go. There you go. And there you go. Now we're up, what, $1,000? Now we're definitely up $1,000. There we go. Let the trade work. We should break day highs. The idea of this trade is a continuation in the overall movement that's taking place, meaning we're in bullish price action at this moment. We should at least, I'm checking something for some reason on a different chart and it's just showing me these levels. We should at least test the top of this level. And I'm pretty sure I thought we were going to like $41, $42. So we're already in. We're over $1,000 up right now. That's fine. Let it go. We're ready to sell. All right. Here we go. There we go. Boom, boom. And 2 points up in this trade. Breaking through day highs. I should sell here. I might wait too long. I think I wait too long. You're breaking through day highs. Let's see. I don't know when I trade or when I sell. Hopefully I don't wait for this drawback. Sometimes you get stuck in something and you're just watching it go up. You hold it a little long, but we're pretty strong here. We're going higher. No particular reason to sell yet. Level 2 is still just punching up. Don't see really any selling coming in here. We're not hitting a level. I think I said I thought we would hit 40 and I was going to sell at 40 or 41 or something. I checked the price improvement. It's what I'm doing right now. If you see my mouse, I think we're going to hit 40. Boom, we hit 40. Now I should get out. And I'm 90% sure in Discord, if you guys are in Discord with me, I told you it was going to $40, that I thought the target was like $40 or $41 or something like that. And I'm holding to whatever target I called out, and I sold. $41. Boom, sold. I don't care what it does. I think I said my target was $41. I hit $41 and I'm out. So we made another roughly $3,000 there. That's a lot more than what we lost, the 1,400 that we lost. And then I think I leave it alone for a bit. So at this point, I don't know, we're up 9,000-10,000 on the day. I would have to go back and look on you. So first on that, first on the trade, the point of what I'm showing here is how to time your entries on pullbacks to allow you to minimize losses. Because if you would have taken 5 or 6, like, oh, I'm going to take a breakout, or wrong screen. I'm going to take a breakout. It didn't work. I'm going to take a breakout. I'm going to take a breakout. Like, this whole move could have not paid you back because you could have lost $2,000 to $3,000 there taking 10 contracts. Or if you took less, you could have lost less than that. But you could have lost money doing that. And that trade wouldn't have mattered, or you wouldn't have caught that whole move because you were scared, or you would have held longer than I held. And I'm pretty sure Tesla rips down after it hit $41. So you need to limit your trades on the pull-ins to specific times and specific locations. I took 3 front run losses, I think, there. No strategy had triggered. I was front running ideas that I had, and they weren't bad, and they could have worked if I just held. Like there's ways to trade it where it would work, but I had an idea with each entry for what I was looking for. I wasn't just randomly buying every maybe it could go higher, maybe it could go higher. It was like, okay, we pulled in. Okay, this is happening. Okay, we did this. We're at the moving average. Okay, we're holding up. We popped. Hey, we're consolidating. We didn't break down anymore. All right, we're taking off. And let me jump back. Let me minus this out and go to Tesla. Let's go to Tesla. This is a trade I'm talking about that failed. That would have been a good one. Tesla, how did I get the 41? That's not it. That's not how I got it. There you go. So I probably fibbed the pull down. I'd have to go back and look at my other chart. So I use different charts for recording than I do for drawing, and they're supposed to lap over. So the drawdown to the 21, the fib was near 41. I didn't think it would, and it was also a whole number. So generally speaking, when we're coming up to a whole number or a level like 840 in Tesla, I'm going to try to look at the daily to see, because I looked at some of this stuff pre-market. Let's see if 840 was anything. Nothing in particular there. I thought we were going to test the 840 level, and if you pull back at R1 right below 840 and your R1 is holding up and you're going to break out, it's like you're going to bust through that whole number, was my thought process on you. So it was like we're pulling down. I probably fibbed the pull down, and then it's like, okay, so that's maybe an idea for a target of where we could go. But you know what? Also, if we come up close to $40, like $38, we pull into a moving average, and then we go higher. Where's your next point of resistance? It's the whole number in Tesla. So we're going to hit $40. Well, I'd imagine we're going to punch through $40 and then fail. So it was like, I think we do 40, 50, or $41. So I'm going to say we're going to hit $41, and then we're going to drop down. And it's going to be a little bit below this fib. So I could see us hitting $40, 40, 50, $41, like in that area, and then see us, possibly pulling down. You're going to break that 40 level. You're either going to come down and test the 40 level and rock it up, or you're going to go up, break through 40, and then break back down, which is what we did, and we broke back down. So it's like at my point in my mind, what I'm thinking, I think this when we come to levels like pivot levels, R2, R1, I'm like, okay, so what are we going to do here? Well, when's my next trade? What am I looking at? Okay, so I think we're going to break through this level and use it as a consolidation for a launch higher, or we're going to hit this level and just fail hard. And so that's the thought that's going through my head. So if we break down right below a whole number, like 40, and it's like, oh, we come up to 40, we hit 37, 38, we break down in Tesla anyway, and then we start launching off, and we're like, okay, we're going up. It's like, okay, we're going to punch through 40. We're going to go a little bit above it, and then we're either going to just tank, or we're going to like pull down, like hit it, like 39, 40, and then kind of go higher. And that's kind of how I think about pivot levels on a short-term time frame. So that's how I pick that. And it's not a dumb question, and I hope that helps kind of, that's my thought process. And you can see how the fib worked there too. And Chris, it's not necessarily a dumb question, but wash sales don't matter. So wash sales don't really matter. Like I don't understand. Like it's with the options, and it doesn't it's not an issue. Like I've had some people who have never done like what I do kind of, and like, well, how do wash sales? Like wash sales aren't an issue with options. Like to me, like who cares if I traded an option and I lost 500 in it before, and I get back in it and I look for a different entry like I did there. I jump back in it and it's like, oh, well, you made this or whatever, and it was a wash sale, so technically on the day you won't like. None of that matters to me. Every trade is its own trade. I'm not avoiding wash sales. I trade out of an LLC. So if you're talking about for tax purposes, that doesn't matter. Like for me, it's just net gain, net losses. I don't hold anything. I don't do swing trades. So wash sales really don't come into play. And as much as they do come into play, it would have to do with like I have a tax accountant. I trade out of an LLC. And it's written off as like a business, whatever. So it's not an issue at all. Wash sales don't matter when you're trading options the way I trade them, and you trade out of an LLC. Even if you don't trade out of an LLC, they're, taken out or whatever. It's a complete non-factor. It's a complete non-factor for doing what I do and doing it how I do. For sure. It doesn't, it plays no, wash sales play absolutely no factor at all in how I trade. So again, the purpose of that initial thing isn't to be like, oh, Gator made this much. I wouldn't have showed you the first two trades if I hadn't have accidentally scrolled down too far, and we could have just watched my losses. But yeah, so you're going to take losses. Like I take losses. I take losses in the midst of taking those trades. And if Tesla would have failed there, I would have taken another loss, and then I would have had to decide if I want to keep trading or if I wanted to wait to time my entry somewhere else. And it's normal. Excuse me, I'm exhausted. It's normal. It happens. You're not wrong. You're not, it is a normal part if you're going to do hyper scalping and you're going to try to time your entries to take 3 or 4 losses. The trick is not taking a million of them everywhere, but timing them and having each trade be an idea and a trade. Like I had a 30-cent trade. Like I had a 6-point trade followed by a 1.5 point trade, followed by a 3-cent trade, 30-cent trade, followed by a couple of losses. And each one of them, I could tell you my thought process for entering them. And sure, hindsight's 20/20. I should go back and be like, oh, well, you could have just done this. Like, when Tesla hit here, you could have been like, hey, buy off the 8 and give it room down to the bottom of this igniting candle. Like that's a strategy you could technically employ. It's like, hey, we hit the 8, and as long as we don't break down here, you're good. You're up money, give it some room and let it go. And you didn't break down and you went higher, you wouldn't have taken those losses. I mean, yeah, sure, that's fine. But that's not generally speaking how I trade. Off the 21, sometimes that is how I trade. But as a general rule, that's not. So you really want to be able to, you really want to have an idea for the reason that you're entering a trade and what you're looking for. One of my kids might be waking up. If they wake up, I'm going to have to run. If y'all have questions, send them. Send them. I'll be glad to answer. I'm going to look at, see if I can, 104. What's 104? Let's see. What are we looking at? I'm scrolling through some of this video to try to find. And then I'm going to talk about another trade that I think is great for that I think is great for smaller account traders. If you're in the room with Geronimo and you're trading with him, when did Tesla break? When did Tesla break the 21? Which one was the red one here? So we're looking at 11 o'clock. All right, let's jump to 11 o'clock. All right, so I'm going to show you the difference. All right, so, well, if y'all have, again, questions or anything else, send them in. Or you just want to chat about something else or BS or whatever it is. Cheers to you incredible people. And then someone asked about R1, R2, and R3. So, R1, R2, and R3 is something that you can do on TC2000. Cheers, homies. Got too many of these before I came on this show. I can't really drink that many of them right now. So here, where's it at? Oh, it's not on this chart. I'll add it to this chart actually because it was supposed to be on here. I don't even remember how to add it. So this is a TC2000. I have my pivot levels added. Let's see which one's it under. Oh, pivot points. Okay. So yeah, you just go here, click on plus, and type in pivot, P-I-V-O-T. Right? What am I doing? Pivot points. There you go. There's your pivots. And it's basically levels from the previous day. R1, R2, R3. You'll find that these levels really work really well for intraday levels. You can kind of see them bouncing off here, bouncing off here. Pivot points are very important. I am sure other platforms have them, but yeah, on TC2000, you definitely want to have pivot points added to your levels. And so just add that, and that'll give you your pivots. That's how you get your pivots. Yeah, I'll show you what I do in the morning. Let's review this trade. So really quick. So that's R1, R2, R3, Dan. And it's just these different levels, and they're just pivots based on the day before, and they're important. The main ones that are important, I mean, they're all kind of important, but this is very important from the previous day. Like, very important. And then R3 and S3 are very important. So let's see if there's a name that hit any of these levels today. Not necessarily, but these are all very important levels. The Qs did it and failed. So those are very, very important price levels from the previous day, and you can usually, price action will act a certain way, and it's like you'll break above it, and then you can see multiple candles fail to break back through it. So you're going to break down, you get back above it, they use it as a springboard, get back below it, you failed to get above it, and you can just see price like acts differently around there. Yep. So definitely add them and pay attention to them. They're not always important, but they're important if you're a scalper, and it's important to know where they're at. Let's watch this trade really quick, and then I'll get to the next questions. So in chat, me and Mitchell were both waiting for something. And I want to watch how let me move my face up. I hate this sometimes. Give me a second. There. So we're going to watch how this moves. And I want to show you the difference in this trade. So watch how this reacts when it hits the 21 as opposed to the other one. So let's watch this here. And let's see how this reacts when it hits the 21. So I'm waiting for Tesla to hammer into the 21 to go long. We want Tesla to hammer into the 21. That's the trade idea. It's going to hammer into the 21. It's going to shoot up and go long. That's what we're watching for. Just waiting for this to go down here, drop right through it, and then pop up. Let's watch. Still waiting. Still waiting. All right, so now we're breaking down. We hit the 21. Let's see how we react here. Let's see if we get buying pressure coming in. We hit the 21. You could have bought here and you wouldn't have necessarily been wrong, but let's just watch no real buying coming in. We hit the 21. If you bought, you should be getting ready to sell. And if it breaks, I didn't see enough buying coming in, but if it breaks, you don't want to get in. So here you could have gotten in and you wouldn't have been wrong. You need to get ready to sell. Watch the difference in how this happened and the video I showed earlier. Watch, okay, we're breaking down. We're breaking down. A lot of red coming in. You might want to hold it. All right, a lot of red coming in. All right, we're flushing. We're flushing. You're now flushing the 21. You're not just hitting the 21 and kind of bouncing. You're flushing. This is bad volume. You do not buy into this volume. This is not volume you buy into. There's no real buying coming in. We're just going down. I didn't buy anything. This is a swing from another, I think a meta short I was holding. But you're going down and you're just flushing. Or Tesla, I might have been in Tesla. But you're flushing. That is different price action than when it hit the 8 on the earlier video. So earlier on the video, we hit the 8 and you saw how it reacted. When it hit the 8 and it bounced and it kind of held, Tesla did the same thing there for a second and then it started failing. And it didn't look as strong. It looked a little bit different. And if you took that there, you would have taken a 0.2, 3 point loss holding that Tesla flush. You have to be very careful when you're holding names near these levels. Once they kind of show you that they're not holding up and they break lower on that accelerating volume, you just got to cut your loss. And you really need to wait for that a lot of green or that little bit of green popping, like it flushed. And it didn't just flush and stop. It kind of flushed. There was a little bit of green and it stopped. Like you had some buying coming in. So you had a drop below a certain level, some buying coming in, something happening there. Like if you're just buying every drop of a pivot, you're taking a chance of getting hit. But if you're dropping and you have that little bit of kind of like and then you go up, you know, you have that little bit of confirmation that there's some buyers here. There wasn't that on that drop. So at that point, you're not like, okay, I'm taking Tesla. It's like, nah, the name is breaking down. So I wanted to show you the difference in what the price action kind of looks like between hitting the 8 and holding the 8, what it did earlier in the video when we made an extra couple points, and what it did when it hit the 21 and it failed the 21. You would have been fine to enter there, but there's that high risk when you enter there of something happening, of that going on, because you really didn't get any like accelerating volume coming into it. So I can send you the A+ video. There's a video on A+ triggers, Anya. I don't have it now. After the show, I'll send it to you, if that's okay, on how to find A+ triggers. And the second part, levels you like, are fibs. And I'll answer that question with DT, TC, DT, and TC. Your question, how do you set fibs in TC 2000 in the morning? So in the morning, I do, if you guys are on my morning, it's not my morning show, but on the morning show, it's me, some CTs on there, Rose, like it's a community thing, Andrew's on it. We kind of give levels. And I'll answer on your question kind of here. 'Twas much great trading, little Curbster. Cheers, brother. So we'll talk about levels really quick and how I look for things in the morning. Hard to do because I have to zoom out on some of these. So let's move my face out of the way. And then we're going to watch, and then I'm going to answer part of Anya's question and part of the other question. So levels and fibs. So A+ triggers are something very specific. I don't use them a lot, especially right now. Here is another way you can get this level. I do this. So if you were on the morning show today, I'm pretty sure towards the end of it, I said I think Tesla something something pulls in, hits the 21 and rallies to possibly 138, and hits that 838, 840 level. How do I do that? A lot of times I look at the big move that happened yesterday. So I think of price action, and I've learned to do this from JR. I think of price action as now not just legs within a day, but legs within a last couple days. So when I wake up in the morning and I'm done with my kids and I'm doing this and I sit down with you guys and I'm in the Zoom call in the morning and we're talking about what we're looking at, if I'm looking at this Tesla today, and obviously we already know what happens, this is one of the things I do to get a level, to get an idea of what I could be looking for. So let's pretend we can't see this. What do we see? Let's talk through what we see. What do we see on a daily? So let's go to the daily. What do we see? All right, we had this massive gap up day. Top of the day is 1980. We're gapping up above that. Don't move that. We have 1980 is the top. We have a pivot at 835. We have some of these candles here, which really aren't big levels, but really we have room to the bottom of this candle, $43 at least. Possibly, we have room to the mid 40s. So just hypothetically, excuse me, we have room to possibly the mid 40s. So we can say that just on a daily chart without looking at the hourly pivot levels and zooming out. We can say, hey, we have room to the mid 40s just looking at where the last top wicks are. Like, you had a wick here, it failed and it broke down. So we could get to the 40s. We could definitely get to the mid 40s today. 35 to 40. And you have to also remember that you have to take stuff into account like the SPY and other things like that when you're talking about continuing a bull run when we're about to hit $400. So today's a little weird. All that as it may. I'll look left on a chart. Where are we at? Are we near these levels? What happens if we break out? Okay, so we're done with that. Now let's go to the 2-minute chart. We go to a 2-minute chart and we say, okay, what happened yesterday? Okay, between 10 a.m. and this, we had this big bull move. It doesn't matter if there are multiple moves. Where was the move yesterday? We had this big move yesterday. So let's just fib this. Does this match up with any other levels that we have? Yeah. All right, so we hit this, so we're here. So there's a good chance we could at least hit, we could get in the 838 range. And a lot of this stuff is kind of general with me. I want to have an idea of where we're going to go. It's kind of like surfing or fighting or something else. You want to know where you're going. You want to know what could happen. What is a realistic idea? So you have an idea. So let's create an idea in my head. We open up, we're here, good chance we pull in. I think we test yesterday's high, 1980, test the 21, which is the red line here. Good chance we test, I need to change that to the blue line because it's the blue line on my other charts. Give me a second, let's change that. I messed up my lines. My kids deleted my chart and I had to recreate this chart so it doesn't have a lot of lines on it. So the fib line says $38, I think, and look at that. Actually, look at that tag perfectly. 38.75 and 38.82. It almost hit it. So you look at that, and you're like, okay, so we had a big leg up or two big legs up, and you could do this too. We're opening up at the top of this range, and now we are consolidating. So we had a big leg yesterday, and then we consolidated basically. Held up, gapped up in the morning. All right, so we're going to pull into the 21 and then rip. If we pull into the 21 and rip, what's the next leg? The next leg could be somewhere around $38. And I'm not saying that's perfect. I'm not saying that's right. I'm not saying that someone like JR or somebody else, Kelly, wouldn't be able to give a more precise, exact, like, no, this is what you're doing wrong in this. But if you're just talking to me and you're like, hey, what do you look for? I look for something like this, and I do this with multiple names. So I might even do it with the Qs. I might take something like the triple Qs. And I don't think I did this in the Qs yesterday. You might do something, let's see, why do I have a line drawn? Here we go. I want to redraw that line later. Like, let's see where today is. Today is 4 p.m., 10 a.m. So you opened up here. You know, I might do the same thing here. So I would come in here and I would do this. The top is 309, 307. So, you know, I would fib this big line that we had yesterday. And you could kind of adjust this how it is, but I just fibbed the whole thing. I guess if you do this one, this is an actual pullback. And then you have a measured move. I would say, okay, so hey, you know, we had this line pull back. This is a breakout. You had to do this pivot, so this would be a leg, and then we consolidated and we broke higher. So I'd look at it, I'd be like, all right, so the Qs at the open might have room to 308, maybe 309, and then there's a chance we get a pullback. So maybe I throw up this at the open because I might not want to keep this line here. And I want to say, hey, that might be a possible level. Let's go out on the hourly and let's see if this level lines up with anything. Oh, wait, if we look left, we're at the top of a lot of candles and we're in the middle of this, this demand range. So if we hit in here, yeah, we still have room to 311 or so, but the SPY is hitting 400 in this. So I don't know if we get through R1. I think there's a good chance that that fib could be legit. And I remember I'm doing this before I see the move in the day. So you just do this at the beginning of the day. And in a sense, you kind of create that idea of what could happen in your head. And you're like, okay, so all right, so we popped up, we hit that level, we could have some resistance here. Why? Because we had a fib of the 168 here. We had this line, it pulled in, broke out. We had this breakout. We hit the 168.8 retracement, and then we started fading. So, you know, unless the Qs break above that, we're done. All right, so that is a way to answer two questions. And Anya, I kind of hope does that kind of answer? And then I look for things that match up that are the same. So that actually leads me into the second thing, which is JR's trade. So there were two trades JR did today that stuck out to me that I wanted to talk about on this show. And again, feel free to add in comments, questions, anything else. So do I have a drawing tool on here? I don't use the drawing tools, so I don't know where we're at. So JR had two things today. The first one was this. He called along here that you had like a wedge forming and you were going to break out. And which one of these is the stupid drawing tool? How do you draw on this thing? That's chart notes. I never have drawn on this before. Okay, so we're just going to pretend whatever that this did this. You see how this is lined up here? You see this? This was his chart. And if you guys are in the T3 live room, you know what I'm talking about. If you're not, I'm going to post a link in the video of all my videos, but this one, an affiliate link. You can join, you can check it out if you want to trade with us live. But over in the T3 live room, he had this drawn and a pivot. He thought the Qs were bouncing and going higher. I took this trade off of the 200 out of this breakout. It did go higher. I sold some here and then took a loss on the second half when it broke through the 200. Point being, he had a trade idea here, which was a pull down and a bounce to go higher and to continue the move. If you continue the move, you retest that 308 with the chance to bust out and go through day highs. And then if you did want to continue, possibly retest the 311, area, at least retest 9, or at least retest the 9 area, I would say, or so, R1. So it's like, hey, if we hit this level, I have an idea for a trade. And this is one of the things that small account traders can do. And you can take, when JR gives an idea like this, even though it didn't work, as far as the thing, it turned around and actually failed, and then we went short, and we're going to talk about the short that I took and that happened later in the afternoon. You have this wedge break to the upside. There's a possibility of a long trade here. You take it, your target day highs. You can take a trade like this when JR gives something and he gives an idea off of the 200, you break up in the 200, you take a scalp long, you sell a little bit and hold a runner. And I'm going to do some videos about this in the future. It fails and you sell here if you understand what he's doing. But the trade I want to talk about is then the next one, this trade. So let me move my face out of the way. And this is going to go into Monday, guys. So what I'm talking about now is going to play into what I'm going to look at Monday morning. JR did a measured move. I didn't look at a measured move. Nothing against measured moves. I think they're great. Is this the trade? This is it. All right, so there's a couple ways I do this. One, so you have your failed bull pattern. If you were in the room in the VTF, you have your failed breakout pattern. You have a leg down and a pop into basically the 21 or a pivot. So Dan and other people ask, why is a pivot important? Look at this line, 306.25. Look what this did. You broke the 200, you broke down, you came back up and hit the daily pivot and failed. That's why the pivot line is important. This is important. You hit that and failed. So this is your next leg down. You made this leg down. You then pulled up into the 21. Here is your short. And I posted something about this, but JR talked about it, and he called this short, and he called it short down to basically 299, a break at 300. But what you can do as a small account trader, as somebody that doesn't have a big account, as somebody that doesn't have stuff, if you are waiting and watching for specific trades, you can wait for something like this. You can wait for a failed bull pattern. We're now in a bearish move. We popped down, we broke the 200, we came up, we hit a level, the pivot of resistance, we fell down, we put in another leg. Let's say you missed all of this. It popped back up into the 21, the 61.8% retracement. Watch my video with Kelly if you want to know about these fib lines that I did with Kelly W. I think it was show 60 something, 69 maybe, 66, 60, 49. I don't know. You guys tell me. And then you break down. You sell some maybe on the initial pop or at the 100% retracement after hitting the 21. And then you sell another 25% here. And then if you're really bold and you either sell all of it here at the, I'm sorry, my face is in the way, the 127, you could sell some here at 301.03, or you can hold and, you know, it didn't actually hit the final measured move yet. But this is part of what I want to talk about for Monday. But if you're a small account trader and you're trying to find moves that pay, or maybe you're someone who doesn't like the quick scalps, like I showed you quick scalps earlier in the day, things that were fast, things that hit heavy. It was like, boom, you win or you lose $1,000, 300, 400 bucks at a time. It's like, boom, boom, boom. And you don't like that. And you're like, I want slow or methodical level trades. Those things exist, obviously. But there are ways to get them to where you can have high success rates in them. In something like the Qs or in the SPY, where you have a down move like this. It's clear you had a failed wedge breakout. It actually did break out. It came back. This was actually a test because this line went like this on his charts. It failed the 200 and flushed, so you get out when you fail the 200, in my opinion. It flushes, comes back up, tests. If you don't take this short, that's fine. But let's say you miss this short and you're like, okay, I'm watching for the next. JR's on the mic. He's talking about another leg short. We hit the 21. We break down off the 21. And then even if you miss this move, it comes back up and basically retests the 21. This is another like God-given opportunity for you to short. It's like, I'm getting another chance. And you get this short, and then you take it down a full point or something, 1.5 in the Qs, and that is probably a point to a 1.5 on your options if you're playing at the money options. So you probably can make, you know, if you're taking 10, 20 contracts, if you only have $3,000 or, you know, $10,000, $15,000, you could take 10, 20 contracts here, sell half here, and then hold half here. This is still a $1,500 to $2,000 trade. If you're just willing to sit there and wait for the patterns to develop to either work or fail, take the proper size, not go too heavy in a trade, and let those trades work. And now you have a trade that lasted, 2 hours. So if you're really trying to build an account and you like slower names, these strategies, these fib levels, these things work on slower time frames. You just have to be able to size appropriately. And I wish I had somebody on the show with me to kind of, so you guys just weren't listening to me and you could hear somebody else say it too. JR or anybody else to say the same thing in the sense of they exist. If you understand what the trade is, what the trade idea is, what you're looking for, the target that you're getting, and this goes to Anya's question, to DT's question, is you actually look and you see this stuff happening. And if we can see, if I move my face out of the way, this is a 15-minute chart. If we go back, look at this candle right here, guys. Look at these candles on the 15-minute chart at 12:45 and 1 o'clock. Look where that's at. Even if you didn't catch it here, up here, but my face is in the way, but let me move my face out of the way. Even if you didn't catch it here, but you understand that we're in a downward momentum, you're like, well, I missed the original play. When can I get back in it? We're bouncing around here. Look at this 15-minute breakdown here. Look at your chart and look at the 15-minute breakdown. So you can be like, dang, well, we're near the 100% retracement. The target's down here, $1. We're at, $2 now, basically. So I have a point I can get to that 127. We have a 15-minute breakdown. I bet if this 15-minute breakdown goes through here, better view, I bet we hit that level. So even if you miss the initial pull, if you wait and you're patient, you can find a trade within the overall move that will get you in it, that can give you good risk reward. For instance, I actually traded this one and I got in it around here because I was looking at this and I think I added to it, or I don't remember what I did because I was in and out here. My kids were something or another, I don't remember. But there was a trade in here and I took a trade somewhere in here. It might have been as it broke down because I was like, okay, JR talked about this. We're in this move. We bounced down, we hit the 100%. This is the sell mark. All right, we sell some here. We pop back up. We're kind of consolidating. Yeah, we're above the 21. Who cares? This is your stop. All right, we popped up here. We went down. We popped up, and we instantly failed back into the 21. You know what? I think I can take 30 contracts here and kind of let them ride, and I can get 50 cents, another $1,500 to $2,000 in the next few minutes if I take the 15-minute breakdown, which is coming. And you can think about something like that in your mind. Give yourself enough room. Like if you have this hey, you know what? The top of this candle here on this pullback is 277. Tell you what, I'm going to give myself to $3. So if it pops up here, I'm going to get out. If it pops up past, what's this, RS1, I'm going to get out. If it doesn't, I'm going to hold it. I'm going to take 20 contracts, 30 contracts at the Qs. 30-cent pop is only a couple $100 loss. Like you might lose 100, 300 bucks, depending on the size you take. It's not a lot. You might lose 30 cents, maybe less, maybe more. So you have like a 30-cent stop, S1, and you know what? We're breaking down. We're in the middle of a bearish move. JR's target is like $98, $99. The 161 pivot is down there. The 127 is here. I think I can at least get the 127. I can get a point move, a point and a half move for a 50-cent, 30-cent loss. You know what? We're in this range here. We're breaking down now below the 21. I'm going to buy it. I'm going to take it. I'm going to give myself this much room, which is maybe 50 cents or less. Loss in the contract. If you do common, it's different. And we're going to go down and I'm going to take this risk reward. You can do that intraday. That is the only type of intraday trading I do, is finding stuff like this, entries within overall moves that I'm going to get in, take small size and hold to a level. If y'all kind of get what I'm saying and what I'm looking for. And then what I was going to say about like watching this level for next week, I would be curious to see if this level tests on Monday, basically. Something else I'll sometimes do is by the way, just for you guys who are here and you're hanging out and you want to listen to me blabber, when I draw these fib lines, I'll look for this. Like, look at this. I'll look for this. So in my head, I'm thinking there are buyers and sellers at these levels, and there's buyers and sellers at this level. So I would be looking that I think there's going to be a pop between because this is a low here, 335 cents, and there's probably going to be a pop somewhere between 321. So between 321 and 305, there's going to be a pop. I know the pivot's down here. We might come a little bit short. I might want to sell higher. So I might want to sell somewhere at the 320 level, 340 level. And I mean, you can kind of see how that worked. If you look at the low here, the low was 312. So it wasn't far off, and I will often do that. If you look left and you're looking for a target and your fib line is just below it, I usually sell at the level, or I sell more here, and maybe I only hold 10% of the total trade to this level just because of this. But I wouldn't be surprised on Monday, guys. I have no idea what's going to happen in the market or anything else. We could continue a down move. We could gap down. We could do whatever. But I wouldn't be surprised to see that move. Here's your fib line. Play out. And I wouldn't be surprised to see it actually hit that level down here around 299. Wouldn't surprise me at all. And so what I'd be looking for in the Qs, if we're a gap down to that 298, 299 line on Monday, I would be looking at it and I would be like, okay, so what do I think Monday morning? I sit down, I'm like, oh, Qs are gap down to 298, 299. All right, we're at possible support. We're at the top of this. Look where this breakout happened. Look at the bottom of this. Like, all right, so there's a chance we could get a pop here. We're at the bottom of some of these fibs. All right, maybe we pop up some. If, we open up and I don't know what's going to happen, but we'll have to see where we open. But those are the things I think through when I'm looking at a chart and I'm looking at that. And I'll quickly throw up some of these lines, throw some of this down, and be like, oh, well, there's a fib right here. All right, that's here. Maybe if I'm just doing it on the Qs. Maybe I want to do that just as a level so I don't have dirty charts. And look, that lines up with this stuff. So I just know if we get near this level, there could be possible support here because we're at an important 127, 161 fib line of that. So there might be a market pop that comes in here. If you guys get hopefully I'm not rambling. You guys kind of get what I'm saying. Hopefully it's not too complicated. I'm trying to make it simple, like keep it simple, stupid. I'm trying to keep it crayon eating simple. For you guys listening to me for an hour, like sitting here, I want to make sure that it's simple enough. Well, it's supposed to move, John. So the 200, for instance, moving average is the moving average of the price on that time frame. Thanks, Curbster. So the moving average is like the daily. The daily is down here. So I have, if you look at my 4 chart setup, and I have a video on my 4 chart setup, if you look at this, like each time frame moving average matters. So the 2-minute matters, the hourly matters. Look at the hourly on the Qs, the 15-minute. Let's look at Tesla. Like the hourly 21, the 15-minute 21, the 5-minute 200 really matters. Look at the 1-minute, it matters. All these moving averages matter, and they're important pivot lines during your day and during your trade. Like they all matter, and you don't keep them the same. They're supposed to be different because it's a measure of the average price within that time frame and all this other stuff. I'm not going to get into what how all that works, but in a sense, it is different. And if it's the same, there's a problem. It's supposed to be different. And if you're looking on different time frames, that's a good thing. And it should be different on every time frame. And you should understand the ones that matter and respect the ones that you use for the strategies you trade on all the time frames. Oh, my neck. Oh, I don't want to wear these for videos. I definitely don't. I got to get some cooler blue light glasses. But different ones just because these make me look like I don't know. They're not bad, but so like for instance, John, the 5 minute 200. This is super important line to me. Super important line. I never go like this short. I never would have shorted this into the 5 minute 200. And short worked here and then came back up. But the 200 on different time frames, always very important to me. Always something I want to pay attention to. 5 minute 200, 2 minute 200, simple moving average, all very important to me. 221 and 8 are the ones I use the most. Other ones matter, and VWAP. Other ones matter. Those are the ones that matter the most. So yeah, what Curbs are saying, like when you have multiple setups on multiple time frames, multiple moving averages with stochastics and all this other stuff that just set up, it's just like, holy crap, this is the golden, all my contracts. And it's just like smash the crap out of it. So yeah. But it doesn't happen. And you have to use them as like a general understanding and like, oh, this is what happens over coming into this level. You know, it was like Tesla yesterday just rode the 8 all day. Like look at Tesla yesterday. It was just like rode the 8, rode the 8. You just could buy it every time it hit the 8 on the 2 minute or even the 1 minute. And it was just money. I didn't trade it that much yesterday. But it's like, oh, it hit the 8 moving average, it hit the 8 moving average, 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 hit the 8 pop, fail, 21 pop, 21 pop, 21, you know. You could have done that a lot during the day. I wish I would have traded it. I didn't trade it a lot the other day. So 2 different ideas, 2 different things for small account stuff and big account traders and different things you can look at. 2 minute, John. Everything, well, honestly, it comes back to every time frame, but so everything, it will always come back to the 200 on every time frame. Like if you were to look at it, it will eventually come back to every time frame. But that doesn't do you any good because you're like, if I look at the daily, it's like, okay, it's like Tesla's going to come back to the 200 on the daily. Yeah, how often does it hit that? It's like, so it rode the 200 up. And this was in 2021. So eventually it's going to come back to the 200. Yeah, it hit it here in 2022 and then it went up. So the time frame he's talking about is the 2 minute. So the 2 minute. So you have a 2 minute and you can see it here. Let me move some stuff here. Give me a second. Put this here and move my face out of the way. So what Kelly's talking about is, look at this. This is your 2 minute, and this blue line that you guys can see is the 200. Expansion, contraction, expansion, contraction, expansion, contraction, expansion, contraction. I guess contraction and expansion, contraction, expansion, contraction, contraction, long contraction. Boom, expansion. And then look at this. Expanded, 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 and contracted. Now we're back at the 200. So John is talking about the 2 minute. Well, you only want to use time frames that are useful to you in the moment. And we want to use a time frame that's realistic, that we can make money on. So we use the 2 minute, a little bit better than the 1 minute, a little bit longer time frame. So 2 minute is what he is talking about. I mean, if you get to the 5 minute, you can see the same thing. We're in an expanded state, contracted state, expanded state, contracted state, expanded, contracted, expanded, contracted. It's just that eventually you're going to get back to it. So as you get further away from it, you should be more leery that you're eventually going to pull back into it. It's not a strategy in and of itself. They're like, oh, we're away from the 500 or the 200, so let's long it or short it. But it's just an idea of like, as you're getting away from it, you realize that you're going to eventually go back to it. And in a short term, meaning a day trader, a scalper's perspective, the 2 minute is going to be the best one, because you can see within a 1 day time frame, 2 day time frame, you always hit the 200. Now you might hit the 200 because you go sideways and the 200 comes to you. But like this is the 14th and this is the 15th. Look, we hit the 200 once within that time frame. We then expanded a little bit. So there are trades within that expansion. So from the 15th to the 18th, we just went sideways. We came into the 200. All right, we're into the 200. We now have an explosion off of the 200. And then we come back into the 200. We don't hold it. We fail it. So we expand to the downside. We expand. Oh, man, I deleted that line. I don't remember what that line was now. I have to go back and look. I have to rewind the video. What up, Blademan? How you doing? So we go down. And then we pop up for some reason into day 19th. So this was a short. I think I talked about this short on Monday. Was that 2 days ago? I talked about this short on my show the other day. I know I called this one because you gapped up into the 200. So it's a short and we go down because that's resistance. We fail into an expanded state. We come back into a contracted state. We're at the 200 again in the same day. So you can trade this within a day. Later, little curbster. Yeah, you're welcome, brother. Yeah, dang, dude. Dang, guys. We've been going for a while. And now you're back into it. So when you're talking about that expansion and that contraction, you're going to always come back in there. Now we've come back up, and now we're below the 200. So what are we at in Tesla? Well, what am I going to look at the next day? I don't know. Look, we're in this little demand zone here. I don't use some of these other tools. Let's see, what tool is this? Quadrant lines? I've never used this one. Oh, there you go. Oh, that's cool. Oh, that's cool. All right, cool. Oh, nice. So we're in this little zone here, between here and here. I'm going to have to use this more often. This is handy. I do some of these by hand. So you're basically within here and you have the 200 above. So if we gap up into the 200 at 25, 20-ish dollars, unless we pop above it and go down and launch up, there's a good chance we'll hit it and then we'll get into an expanded state to the downside. If we gap down, we'll be in an expanded state. We probably pull down some and then over the course of the next day or two, pull back up into the 200. So when you realize where you're at within the move, you can realize, okay, this is what's happening. This is what I can do. Okay, this might be where we're at. Now we're within this demand zone here, this breakout. So you can see this here if you're like one of those fib guy or demand supply zone people and all this other stuff. Like, as long as you hold this 810 level, pivot 800 level, this breakout, you're still within, just to draw some other lines that don't really necessarily mean anything, but, you're still not necessarily in a bearish, you're not necessarily going down. Of this whole move since we gapped up, and I guess you could even do this, we're still at the top of it, so you still have room to the downside to like 803, 800 level, around this breakout, 50% retracement around here. I think Tesla has room to 91 on the downside. You probably go higher before then. So if you break, me just looking at this chart, I have no idea. I'm just ideas. You guys ask how I look at things. If I looked at this, the bottom of the chart right here is like 808. If you break 808, you have room to give back to about 94. I guess you could say $91. You hit $91. Let me move my face out of the way. You're kind of here at the top of this level where we kind of broke out at. So between here and here is your kind of breakout zone. So where's the volume at? As JR likes to talk about volume, there's your little bit of volume. Yeah, so it just depends on how you draw it and how you look at it. As long as in Tesla you're holding that 810, 813, 811, which we do seem to be doing. I should probably look at an hourly. Let's put it in hourly. Declining, increasing volume, some green volume. You could see it move higher. Tesla, let's see. 811.41. I'm going to throw a line there. It's maybe not a good line. But I might put that just to see if it holds. We'll see what happens. But I think you could have some, and so these are things that I look through and think, when I'm trying to decide where something's going to go or not going to go, and I get an idea for a trade or a day. And then if for 3 or 4 days I'm doing the same thing and it's kind of working, then I start bringing it into the room. And I'm like, hey guys, like I'm looking at this level or this level. Why? Well, I've been doing this for the last 2 or 3 days and it's working. And I'm kind of using this concept. I'm drawing these lines. I'm seeing what makes sense, what lines are lining up with other lines. Yeah, I think we could hit this level and it could work. And for someone who asked about pivot or R1, look at R1 there, where it lines up on the hourly, if you want to know why those levels are important. And so in the middle of the day when I'm hanging out, if I'm not gaming or doing something else, like I'll look at that and this other stuff with you guys. And I'm like, okay, where are we at? What are we in the middle of? You know, and I mentioned the SPY earlier. I'm rambling. I don't have anybody else here. So you guys are the fam tonight. You got any other questions? Ask away. What do you mean you're self-destructing, Robert? You okay, man? Are you doing all right? Oh, I drew this earlier. Look at this. So you know, guys, how the Qs didn't hit that level? I drew this earlier because somebody in chat asked me about it, and I told them I thought the SPYs were done going down. You had this same down move in the SPY. Like the Qs had their measured move that I showed you guys earlier. SPY had the same thing. Here you go, you're failed like it was going up, failed breakout, breaks down, pulls up into the 21, same thing as the Qs, shorts, and it actually hits the 168. So Qs missed the 168, SPYs hit the 168 and bounce. And now you put in a higher pivot low. So if you look at this, if you just want to add more things for conviction and stuff, look at that. So if you guys are like, oh man, lines, and you just like Spider-Man lines everywhere, you know, if you're a Spider-Man line type of trader, you know, you could do something. This is really simple. This is like crayon eating stupid simple. You could, you know, once you know how to do it and you're used to it, hey, look, I have a down fib line. All right, boom. Hey, I hit that. All right, that's my 161. Oh, look, here's a pivot low. Here's a pivot low. There you go. Except that would be the body of the candle, not the line. Whatever. And you can basically see, oh, hey, look what happens here. This area, this actually lines up with this at the 161. So the SPY, there's a good chance the SPY is coming down to support right in here. Not only that, but look to the left. Look where this pivot lines up to. So I drew this pivot. Look where this pivot lines up to. It's amazing how this stuff works, guys. Like how mathematical it is when you look back at it. All right, so the 168 is 392.89. Oh, look at that. 392.93. Look how close that is. Look at that. So your down move here in the SPY, pull into the 21 and short to that level. You obviously shouldn't hold the whole thing the whole time because you never know what's going to happen. You short it here, you sell some here, you don't get shaken out here because you sold some, and your stop's up here, or at least here at the pivot and above the pivot, I should say. And then it continues to go lower. You sell some here and you sell your final bit here. And you can do that if you use multiple ways of finding your levels, or finding where you're looking at. And then you have triple confirmation because you have a demand zone here. Look, I'm looking left on my 2-minute chart. I have a demand zone. I have stuff where it popped and ripped. You know, boom here. Yeah, I mean, it went a little bit lower here and then it popped up. All right, let's draw a line from here to here. Look at this. It's the top of this breakout zone. There's definitely some buyers in this area. So we're probably going to go down to 392 area, 89. I definitely wouldn't hold past the top of this range here, which is also the bottom of this candle here. So I should definitely go to an hourly and put a line here. So there's a good chance that we come down to 392.63. Well, how do you pick levels in the middle of the day? Something like that. I'm not sure what you guys are doing in the middle of the day, but like if I'm looking through my charts and I'm seeing a move in the SPYs, and let's say the SPY did this and then it popped up, and I'm bored and I'm sitting in here and maybe I didn't take a trade, and I'm going between the charts I normally trade, and I just throw a fib line up here. I think this is this level. All right, what's going on? Oh, okay. This. I zoom out. I look at the chart as a whole. I'm like, oh, look at this. Okay, look at that. Huh. That lines up. Okay. Huh. this here, that's the top of some of this range. I could see this buy hitting this. We're in an overall bearish mood. Yeah, we're popping some now. We're above the 21. Maybe if we break down and we get below the 21, I short it for a little bit of a down move. That's a trade idea. When I'm in the middle of the day, that's like stuff I'm looking for. I'm not looking to go heavy. I'm not looking for 100, 200 contracts. I'm just, maybe 10, 20 contracts, and I catch a point in it, and I catch $1,000, $2,000 in the middle of the day for sitting there. So instead of sitting here in the middle of the day scalping stuff away, I'm very selective. I take 2 to 3 trades in the afternoon, and I find 2 or 3 trades that are worth something. If JR says something like he thinks the market's going down to this massive level, all right, well, let's find some names that seem like that they're moving and that I can find a fib line on and an entry on, and they popped up. All right. They're still putting in a lower pivot high. They broke down. They're back under the 21. Confirmation we're going to go lower. All right, let's take an entry somewhere around here. It doesn't matter where. Maybe you get in at this hammer. It pops up. That's fine. Your stop should be up here at the pivot. Give yourself a little bit of room on some of these smaller names. Don't go heavy. And then we just ride the 21 down. We get out some here, and then maybe you get out all of it. As it flushes, because you just can't imagine how green you are. It comes back up into the 21. You short it again for the final move. I don't know. What up, Eddie? I'm just giving you ideas of what to look at when you're sitting in there in the middle of the day. You don't know what to do. You don't know what's up. You can do stuff like this. You can find those levels. You can take something from me, from JR, from somebody else who's like, yeah, this is happening. I think we're going to this level. And you can see if what they're saying matches up with what you're seeing. And if you see it, opportunity for you to take a trade with the proper risk reward parameters for middle of the day trading. And if I was a small account trader in this type of market and I didn't like quick scalps and the early stuff in Tesla, because you got to be right or wrong and you got to be able to handle the big losses, and I didn't like that, I would be waiting and looking for something like this. And now you have a 2-hour trade that gets you a point or two, and you can get a point or two on your options, and yeah, there you go. And then you make a little bit of money and you just let those add up. But you find those trades that go with the trend, that give you that confidence. You take the correct amount of size that allow you to let the trade work, and you let those add up over the course of the week, and you'll be fine. But look how all that matches up. It's amazing how mathematical trading is, even though it's not, or it is, and then it's emotional and we don't see it. It's like psychological in the it's psychological in one aspect and it's mathematical in another. It's the best job in the world, if you ask me, guys. So I've been rambling. Let's see what's up. Have you had like stuff going on outside? If you don't want to talk about it in here, Robert, shoot me you don't have to shoot me anything, but you can always shoot me a DM. And if you're having a hard time, shoot me a DM over in the Discord. I don't mind chatting. Try to help you get your mojo, dude. I love it, Jason. Nice. Dude, you got a nice TV. That's like built into the wall. Is that one of those picture frame TVs? I've got one. One of the picture frame TV stuff. I'm just looking now, 737. You posted that a few minutes ago. Good evening, Kathy. But so, if you want to do stuff like that, you can find those trades. And notice the Qs hit the level and the SPYs didn't. Take money on the way down. Don't hold everything to target. Be smart. Take the right size. You don't want to just smash the crap out of everything. It's not going to work. But if you have these bigger ideas, you can get those levels. And there's no secret to finding this stuff. Like it's not easy, because if you're just looking at this, you're like, oh, well, this could be this and this can be this. But you can begin to develop a way to look at the movement. And then in the middle of the day to see when this is happening, coming up into the 21, you're like, oh, on the 2-minute time frame, oh, this is a short. Okay. Because we're in a bearish move. We broke through the 200. We're going down. We're hitting the 21. So it's like we're above the 2-minute 200. We broke through the 2-minute 200 with violence. We came down. We came back up. We broke the 21 and the 200 with violence. We didn't stop at either one. Now we're popping back up into the 21. This is a short. Boom. Popped up. That's fine. Failed it. Chopped around. Little consolidation zone, which makes sense because look down here. If you're wondering where those pop zones are going to be at, you can kind of look left, and yeah, there's going to be a little bit of overhead supply or demand in this area. You pop down, you get around it, look, you never really get back above this, and then you start, going down, and you just take it down. And you can just ride those little trades in the afternoon. Okay, nice. I bought one of those like picture frame TVs to have a picture because we almost never watch TV, and we didn't like the idea of just having a black screen there. But I think you can go on YouTube and you can actually get the pictures for free. Because our TV's not on very much, and we wanted to have pictures on it to, make it look, I don't know, bougie or whatever. Make it look not just like a black thing on the TV, on the whatever. I like your fireplace though, dude. I can't wait till it's not like, well, I actually like the heat, believe it or not. I don't mind 85, 90 degree weather, but I am looking forward to some nice Georgia fall, 70 degree weather and stuff. North Georgia fall and below, nice, whatever weather. Questions or thoughts, comments, concerns, criticisms. Been going for an hour and a half. It's just me. I don't want to bore you guys out, but I won't keep it going too much. The fireside with just me hanging out by a fireside, talking to my family, my familia. Did NVIDIA do the same thing? NVIDIA did the same thing with your 127. When you have this, popped up to the 38. That's a little bit far, but you popped into resistance here. You had a short here, but then it pivot higher, pivot low. That would have been a hard one. I don't think I would have done that one very well. Did work. I never do common, man. I'm actually going to probably start doing common. I might open up another account. Eddie, just because I'm still having a lot of success with options. I haven't had any issue with them. I think what I'm going to do though for trading the triple Qs and stuff is open up another account and put enough money in it to where I can buy a couple thousand shares. So I could do a move like this. Stop moving the lines. I hate this stupid thing. Now I have to, dang it. I have to go back and look at my lines. So I'm going to do it to where on Fidelity they have bracket orders basically, and I could, excuse me, enter a short here in common, shorting it, and I could just set a bracket order here and then a sell order, 50% here, 50% here type thing. It's awesome. I love bracket orders. So I need to open up a different account. I don't want it in my options account. I guess I could have it there, and I could just put more money in my options account. If you guys didn't know, I usually start off my week every week between $30,000 and $50,000, 30 to 40,000 in my account, no matter what I made the week before. And I just kind of keep it there because I find I can double my account every week, roughly, give or take. Like I can make 10 to 20 or whatever plus if you just do that. And so I just kind of constantly do that as opposed to trying to hit new account highs. But I might put more in it so I could do what Eddie's talking about or create a separate one, because I like doing common sometimes and stuff like this. And if you don't know how long it's going to take, you could just like enter here off the 21 short, your red takes green off the 21, and then your stop could be up here above this elephant bar failure. So you give yourself a little bit of room, 380, or let's say $4. So that's 304. This is a 303, so $1, to the upside, maybe a little bit less you could do, and then your target obviously down here, and you could do some stuff like that. And I like the idea of doing that, Eddie. I just haven't done it. And I do want to do it, and I think I'm going to do it eventually. Traders are stubborn, and I don't usually like trading, and I really are changing. And I, generally speaking, just like doing options because I can just buy 100 contracts, 200 contracts of the Qs and make the money that way. So I don't usually switch to common, but I am considering switching to common on some things. Nice. I'm glad you liked it. Are you going to be a common trader now instead of an options trader on a lot of stuff? And Anya, I do the gold, but I only do the gold because of the amount of windows I use. So I think for the average person, you just need the basic setup. Like you need their silver package, and you need the whatever their lowest thing is, and the $14 a month live data. And that's all you need. If once you start getting more monitors and bigger stuff, because you have to create new windows, and I like to have alerts set on like, oh, when this hits the 21 or something, like you can set more alerts when you get more stuff. So like if, like, let's say for instance, the queues are breaking down here and I'm like, I want to buy it next time it hits the 21. I just set an alert and like, tell me next time the queues hit the 21, and then it'll pop up here and it'll tell me when the queues hit the 21 again, and I jump over and I can short it. So I'll set alerts like that in the middle of the day. Otherwise I miss it. And I use gold for that, but I don't think you need it unless you really get into that. If you're just generally speaking scalping in the morning and stuff, and you're like, I'm watching the name I trade 2 or 3 names, I'm just scalping it. I don't think you need more. So you could just do the silver, and you could do the live data. If you're going to start doing lines, sorry guys, I'm tired. If you're going to start doing like trend lines and stuff on different time frames, you definitely need to switch over to TradingView. TC2000 is trash when it comes to trend lines across time frames, so I don't use them much for that. I'm going to switch to TradingView for some of that stuff. I need to start doing it anyway. Yeah, John, you can draw it with the lower levels. You get all the same tools at the low level TC2000. Yeah, I'm pretty sure you get it with other things too. But nice, Eddie. Yeah, I've seriously considered doing that, Eddie, and I'm very close to switching over to common for stuff like the triple Qs and SPY, because it gives you such an exact risk reward, such an exact trade that you can just put in and leave it. Like with Tesla, I think you need to do options, and with some of these other names, you need to do options. But you know, if you can afford it, and you're doing something like Google, and it's breaking down now with the price that it's at, and you're looking for a $1 move in Google, you can take at $100, you can take 1,000, 2,000, 3,000 shares and make, you know, $3,000 just doing a bracket order with your stop loss, and then you just quickly bump your bracket down and boom, you're good to go. Like you can change your stop losses so quickly. And you can all do all that in Fidelity. So I am very close to switching to and putting more money in my account and switching to common for some trades, especially trades when I have to walk away, and afternoon trades like when I want to go play with the kids, or I don't want to be at the computer and I want to walk away and do something else. I could just put in those orders, and they're a little bit better than the stop loss orders on my options, because stop loss orders on your options, I do use them, but usually they hit and then you sell like lower than the option, because the order goes in to sell when the price hits. That doesn't mean it sells. It could drop really quickly and then you could lose another 10 or 20 cents below that depending on the name you're trading. So I think common would be easier there. So yeah, but yeah, it could, Jason. I'm going to, I like trading options, I really do. So I don't know that I'm going to switch. I know I'm going to for some things. I'm not going to switch for everything. And for hyper scalping in the morning, I'm definitely going to, for hyper scalping in the morning, I'm definitely going to stick with options, because I just think they pay better. Like I can tell you right now, taking a couple 100 contracts plus on the queues pays a lot better than any, like a 10-20 cent move in that pays a lot better than what my options or my common would. But that's just for me. I'm not recommending anyone do that. It's super dangerous and risky. But doing stuff like that, I think pays better than the options would quicker on the volatility in the morning. Then as the day slows down and you have time decay becoming an issue and you have all this for afternoon trading and these tradings like the Q's move that JR called and I took and the SPY move and stuff like that, I think common is the better play sometimes. I love the volatility. Like, I don't know. That's I might just be like an adrenaline junkie and I just love the volatility. But not in the afternoon, I don't. And you don't have a lot of volatility then either. And that's when I want to use common. So I might be switching to common in the afternoon and options in the morning. So I can play these moves and you don't have to worry about decay. You don't have to worry about whatever. It's like, yeah, you entered on the red tick screen off of the 21. Your stop loss is here and your target's down here. You just put in your bracket order, and there you go. And then when you get an alert to your phone after you walked away, you can look, you can come back on, you can set another stop loss like here or something, and then another sell, and you can move your stuff really easy. And I'll probably be doing stuff like that in the afternoon. Just so I can stay in trades with it. I think like I wanted to stay in this JR short, but I didn't want to stay in the options. I didn't know what the time decay, the other stuff was going to do. I had to walk away. I was going to go play with the kids after they got up. I wasn't going to sit in the short. So I got out of the short. I'm like, oh yeah, I'm good. I'm green. And I walked away and went and did something else. But if you don't have a small account, common works. If you have a small account, I think options are just the better option. No pun intended, but you should stick with your options. If you're looking to just make a couple $100, $1,000, stick with your options. It's just me. And yeah, you can draw fibs. I don't remember if I said this or not, John. But you can draw fibs. On the lower things, you get all the same tools. All right, guys. Well, it's I've been going for not 2 hours yet, but it's midnight. I'm exhausted. I had a long week. My kids have been waking up at 4, so I'm probably not going to get much sleep tonight. It's the weekend, so it is what it is. I do appreciate it if you guys leave a like. If you hung out and you're watching this, if you share the content, the channel, just have other people subscribe that you know to check it out. If this is something that they like, that you would like, I will be losing my train of thought. I'm getting really tired. I'll be hopefully pushing out some new stuff, some strategy stuff. I've been cutting videos to kind of talk through some different things to hopefully put together some more hard strategy stuff for guys that just watch the YouTube channel and are not as a part of the VTF. If you're interested in trading with me or whatever it is, Discord link is in the description below. You can see me, CT, a lot of other people, amazing traders, incredible traders, Rose, Mitchell. I think Mitchell's going to come on the show next week, middle of the week. And you can trade with us live every single day. And then if you want to do it in the VTF, I'll have links posted to that and most of my videos on my YouTube channel in the near future. So you guys are the best. Love you guys. I hope you had a good week trading. Hope you went into the weekend toxicity free. Thanks, Anya. I appreciate you hanging out. I appreciate you guys watching this. If you're watching it now, you're spending your time watching this. If you're spending it after the fact watching, I appreciate you spending it with me. Hopefully that I didn't waste your time and that y'all got some good content and good stuff out of this. You guys are the best, and I hope that this kind of helped you a little bit on your journey. I'll see you all next week. I don't think I have any content planned over the weekend other than some editing, some videos that I want to do in the future. So I will catch you guys on Monday morning, 9 o'clock, the pre-market show in the Discord room. And then from there, we'll take on the market and we'll see what's happening. You guys have a great weekend. Relax, get ready to go. Next week's going to be a fun week. I think lots of earnings going on. So I'll see you all then. Get her out.